Hello guys, welcome back. Another day, another analysis. So two trades were taken today. Firstly, I had shorted Muthoot Finance around the day's high, and we will discuss what was the reasoning behind it. So the first trade was shorting Muthoot Finance, and then the second trade was a strategy known as a bear call spread. So what really happens in that strategy is that you sell close out of the money options. So when I entered this spread, the price of Bank Nifty was around 38,300. So I shorted the 38,400 call option, and to get the margin benefit, I shorted far out of the money option as well. So this whole trade was done at around 66,000 of margin. Two lots were there. So this was the trade, and after that I didn't think that I would take this as intraday. The plan was to take it for tomorrow as well, but because of the news that NATO has said again, this there is no clarity what is happening. NATO said that the Russian forces have not left their base, left for their base. So then there was a development, and then there was a sharp fall after that. So then I thought, I got my profits, and there is a good profit. So markets are going to be volatile. There is no point of holding the trade, and I booked that as well. So let's go and let's look at the analysis why I had taken those trades. So two trades we need to discuss for today. Pretty easy, pretty straightforward. So firstly, we will discuss the Muthoot Finance trade. Basically, what really happened in Muthoot Finance was that I saw in the morning that there was a jump in the stock around 3%, and it was trading around 1400 levels. So if you see, there was a gap down opening on 14th Feb. So some people were trapped. There were some buyers around 1400 who were trapped because of this gap down opening. So now when they get back that 1400 level, they will look to exit their trade. This was the logic. Because of this gap down, some buyers were trapped around 1400 this levels, and when the price came back up, they looked to minimize their losses and looked to exit their positions. So this was the logic. And this fall, Manappuram Finance was also not doing good. So there was a gap down opening there as well on that day. So if you see gold, gold fell yesterday. Gold saw a dip. This also helped me to realize that there is a possibility that this rise in the stock will not sustain. And this was the first time it was traveling back to 1400 levels and testing 1400 levels. And most likely there were going to be shorts entering the market around 1400, and then there were the highest number of put call writers were at 1400 levels. The highest number of call writers were at 1400 levels, which won't let the stock go above that level. So what I did was, in 15-minute chart, if we go, I entered here. So let me clean this up. I entered here, and then my first target was the lows of the day around 1365, and then it came and bounced from there till 1380. Then it came down again, and the market saw a dip, but this stock was sustaining 1370 levels. So I thought 1370 could be a support. So let's book profits safely. So this was Manappuram Finance, played from 1400 till 1370 levels. The second trade which I want to discuss is the Bank Nifty trade. So there was a gap which was created because of the 14th Feb gap down opening. So 14th Feb gap down opening, there was a gap which was created. Now we were going back and testing that gap. So the first time I was thinking is that around 38 500 400 there might be a resistance, and we could see a fall from there. But in the morning, because of that Muthoot Finance position, I didn't enter this trade. But then the second time it came here, 38 500, firstly call writers were the highest at 37,500, and same in Nifty at 17,500 there were the highest call writers. So I thought this expiry most likely is going to be below these levels, but I wasn't sure about the momentum. So what I did was I shorted the call. So when I short the call, my view on the market is sideways to bearish. So even if till tomorrow 37,500 levels, we didn't get a momentum towards the downside, but even if the stock stayed, Bank Nifty stayed below 37,400 levels, I would have made a profit. So the premiums, I would have had all the premiums. So my logic was, I don't think it's going to go above 37,400, but the momentum, I'm not really sure if it's going to be there. So I shorted the 3700 call. This is a bear call spread. It is the opposite, if you see, of the bull put spread. This is a bear call spread wherein we want the price action to be from sideways to downward trend. And to get the margin benefit, I had bought 2 call options of far out of the money, 39,200. This was it, but I am also holding one expiry trade till Iron Butterfly. Iron Butterfly. So let's see what happens tomorrow. My risk on that is maximum 3K. So I'm not, if I include this bit, I'm not going to lose money on the whole Bank Nifty expiry trade. But yes, 3K, it's the risk. I'm willing to take that much risk. So I've taken that risk, and my maximum profit will be if expiry happens at around 38,000. So if expiry happens around 38,000, then that Iron Butterfly strategy will be in a profit of around 8 to 9,000. So that's about it. Holding one Iron Butterfly strategy, others are booked. That's all. These are the trades, and let's go. So lastly, if you see, guys, I had booked, like, my intention was still to hold the bear call spread till tomorrow, but I booked that spread today because firstly, I already had another spread running on the index Bank Nifty for tomorrow. So I would have had extra exposure towards Bank Nifty. And then the second point was that the premium had already fell a lot in intraday, and if in case there is a scenario that markets get volatile and the trade goes against me, so whatever profit I was getting will also not be there. So a profit is not a profit till it is booked, and it had hit my targets. So I thought I will exit. So firstly, main idea was not get too much exposure towards Bank Nifty, and the second was a profit will not be a profit till it is booked because the markets are volatile. So that's all for this analysis. If you like this video, do hit the like button, and please don't forget to hit the subscribe button. Thank you. Bye bye.